So today we shall be looking at small taxpayers, which is our presumptive tax, DT 2009. Precisely, we are looking at turnover as a basis of tax. We are looking at turnover as basis of tax, and we shall be looking at the meaning of presumptive tax, the presumptive tax regime. We shall be looking at the scope of presumptive tax. We shall be looking at some of those fundamentals when it comes to presumptive tax. We shall be looking at the fines and penalties, tax rates under presumptive, and then I will take you through the return submission procedure. If a client comes to you and they want you to file for them the return, what are the steps and what are you supposed to consider? So we shall begin by asking ourselves, who is a small taxpayer? Who is a small taxpayer? So we are saying that a small taxpayer or a small business taxpayer for income tax purposes is a resident taxpayer whose gross turnover from all businesses owned, you see that? Whose gross turnover from all businesses owned by such a person in a year is above 10 million shillings, but less than 150 million shillings. Okay? The gross turnover from all the businesses. So you may find someone has a saloon. They also own a restaurant. They also own a drug shop. Maybe they own a hair and beauty salon. Okay, I've talked about that. A garage, motor vehicle repair. So if we total income coming from all those businesses, and we see that, yes, it is above 10 million, but it is less than 150 million, then that person falls in the category of small taxpayer. And they are going to be taxed under the presumptive tax system or regime. Meaning that we are only going to assess this person for tax on their total sales, which is the turnover. Okay? We are not going to look at expenses as we are going to see ahead, only the turnover. A taxpayer whose gross turnover does not exceed 10 million. If you find that you have a saloon and you don't make more than 10 million in a year, you have a restaurant, you don't make more than 10 million in a year, you have a shop, general merchandise, you don't make more than 10 million in a year, then it means that you have not yet reached the level of paying taxes for your businesses. You do not pay tax on your business income. Okay? So it means that taxation for businesses begins at 10 million. That is what essentially it would mean, that you start to pay taxes if you exceed 10 million in turnover, okay, in gross turnover. So what are the examples of small taxpayers if you are looking out for clients, okay, to serve in this category? Who am I going to look out for? So here, we are looking at people in hair and beauty salons. We are looking at people in general merchandise or general trade. Okay. We are looking at those in restaurant, food provision, bars. We are looking at those running a garage, motor vehicle repair. We are looking at people in drug shops or running drug shops, clinics. Some people refer to this as medical center or medical center, clinic. We are looking at those in carpentry, those in metal workshops, those running metal workshops. Now, it doesn't mean that someone running a saloon is typically or outrightly a small taxpayer. There are huge saloons that make more than 150 million. So you need to do some kind of assessment, as I'm going to show you. What are you going to look at to confirm that this is a small taxpayer? Then there are those clients who are going to come to you, and for them, they have labeled themselves small taxpayers. Someone is running maybe a metal workshop and is really convinced he's a small taxpayer. But when you look at their records, they are actually not small taxpayers, they are large taxpayers. So the issue of small, large taxpayer will depend on the turnover you have made for that particular year, okay? For that particular year under assessment. Next, we talk about the scope of presumptive tax, the scope of presumptive tax. Now, it doesn't mean that I have a business, I'm a small taxpayer because I'm not making more than 150. Presumptive tax has a scope. Now, on the screen, we are saying that a taxpayer for this purpose may be an individual, it can be a trust, or it can actually be a company. Okay? So it doesn't mean that small taxpayer are individuals. No, it can be individual, non-individual. However, this tax system or regime excludes a resident taxpayer who is in the business of providing medical, dental, architectural, engineering, legal, accounting, taxation, entertainment, public utility, construction services. So if you have clients running these, they are not covered by presumptive tax. Some people in construction are convinced that they are small taxpayers, and maybe someone has told them, for you, your business, since you're an individual, you're just doing construction, small construction, you're a small taxpayer. These are the rates, and they actually know the rates, not knowing that presumptive tax does not cover them. We believe that someone running this professional business, like a lawyer, the accountant, someone who is running dental, you are so professional enough to be able to determine your profitability. Presumptive tax was introduced to ease compliance, especially that which comes with preparation of financial statements. People running general merchandise, drug shops, clinics, saloons, they really cannot afford the services of a bookkeeper or services of an auditor or accountant. So to ease compliance, presumptive tax was introduced. But there are sections of business people that we believe, by the nature of their structuring of the company or the business, they can actually afford services of a bookkeeper, services of the accountant.